Hello, welcome to the Crypto Morning News. I am your host, Taylor. We've actually some pretty interesting breaking news here. We'll go straight to it. Larry Fink says long onlys and sovereign funds are buying IBIT. And he said, I know they bought more at 80K. So very interesting. It's not every day that Larry Fink or someone of his stature shows his cards in that way, but that's very insightful because of course IBIT is not like just a normal blockchain, not like a normal Bitcoin purchase. When firms and funds buy IBIT, nobody knows who is buying that except Larry Fink. Larry Fink and his intelligence group know that internally to BlackRock. And that's part of the reason why you'd launch an ETF, because you can see the inflows and outflows. Other breaking news here, Aerodrome is now available to trade for all of the Robinhood users, including the ones in New York. So very exciting there for Aerodrome holders. Let me know, do you hold Aerodrome? Are you going to buy more because of this news? Are you going to sell potentially? You think this is the top for Aerodrome? I don't think this is the top, by the way. But let me know what you think. Ondo Finance isn't breaking news, but this is good data. Ondo Finance now holds close to 350 million in total tokenized stock, assets under management across Ethereum and Binance Smart Chain, commanding over 60% of the mainstream tokenized stock market. And in addition, former U.S. Representative Patrick McHenry is still serving as the vice chairman of the Ondo Finance Advisory Board as of December. So this is exciting, right? The first part of this caught me a little bit off guard. So they have started tokenizing stock market. I don't know exactly what that means, like what stocks or what indexes and who that's available to. Likely not Americans yet, but 60%, that's a good solid share of the market share at this point. So that's pretty encouraging there for Ondo holders. Ondo price has been beaten down, but still standing, still making progress. Jack Mallers led digital asset treasury 21 Capital approved to merge with SPAC CEP. The company will trade on New York Stock Exchange as XXI on December 9th with more than 42,000 Bitcoin in its treasury. The deal creates a Bitcoin native public company backed by Tether, SoftBank, and Cantor Fitzgerald, not financial advice. So very exciting there for Big Jack Mallers. He's been doing this a long time, and there's just another big win, another quiver in his hat, so to speak. So that's really good for them. By the way, CEP is just absolute. So this is silver, and if you look at silver on the just a quick reprieve, you look at silver, it's giving you a little bit of a pullback here. The reason I was looking at it is because I'm getting a little tempted to maybe, and now it's coming even lower. I think that silver here is probably not too shabby to pick up, but not financial advice. These are commodities. They're not securities, I suppose. All right. CEP, yeah, so CEP has had a nice little spike higher. It's retraced already back down, but it's coming right at 1546 is the price there. This is the SPAC that's merging. That's what this whole headline is about. I won't get into the details of what a SPAC is, although you may not know. All right, let's move on here. Sentiment outlook. Smart money is paying attention. I think that is kind of the thesis for this week for two reasons. The first reason is this stuff here, right? One of the biggest influential money managers of our time is pumping crypto, right? He's coming out and saying people are buying it and he likes it. He's a fan of it. Highlighting again that he used to not be a fan of it, but now he is. That's something that I wasn't expecting in this volley of commentary from Larry Fink. You kind of would have thought that that was a previous narrative and that wouldn't be trotted out again. But that was actually a really big piece of this interview. If you go back and watch it, they talk about that quite a bit. Insight on that is that I'm pretty sure that they're doing that because they believe that that message hasn't permeated through the boomers and the 401k holders and the money managers. They still think that Larry Fink doesn't like crypto, right? So he's trying to make it very, very clear. No, he does. So that's the first reason why smart money is paying attention, is because the leader of smart money is out there talking and saying things bullish about crypto. And it's been a little bit since he has, right? It's not that he's changed his opinion. It's just, he's been strategically silent. Uh, and then the other reason is just purely because it's very the argument for Bitcoin bottoming at this point is pretty strong, right? It's becoming a stronger and stronger argument as days go on. Why do I say that with confidence? Because we're getting a higher high here and we're getting higher lows here. So, the prediction that I would have is today makes a lot of sense to be a red day for Bitcoin, maybe even close a daily candle red. But, we come in and just put a new lower low, higher low in and go higher, right? Or, the other option here that a lot of newer investors to the space don't realize is always on the table. I'll just go out to the weekly for this. It's always on the table for us to neither have a strong bounce to the upside or a breakdown to the downside. There's always the possibility of just movement sideways, right? So we saw it back here. This was a prolonged period of sideways action. We saw it a little bit here. Like, never, again, this is mostly for the newer investors. But those are the two reasons why I think smart money is really paying attention to crypto and to Bitcoin right now. Now, what does that mean? Because paying attention does not necessarily mean buying, right? Although we just heard from Larry Fink that there are some buy-only funds and there are sovereign wealth funds that are actually not just paying attention, they're going ahead and allocating into Bitcoin, at least in the last 3 months. So this is encouraging. We want to see good follow through here. We want to see really solid follow through. We also don't want to see any hacks. This is kind of a moment where it's like a marketing moment for crypto and for Bitcoin, right? This is the moment where a lot of smart money, a lot of rich people are kind of picking their heads up from, oil investing and stock market investing and pharmaceutical investing, and they're saying, Larry, what's that you said about crypto again? Okay, we'll take a look at it. I'll have some people make a report for me and I'll take a look at that. It would be really unfortunate, right, if there was some major outage or some major hack or something like that during this period. And by the way, there already was one last week on the Yearn Finance platform. And then there was an issue, obviously, in 1010. Wasn't really a hack necessarily. It kind of was, but anyway. So there's definitely some recent tumult and chaos that has happened in the crypto space as smart money is paying attention. But I think there's a higher concentration of it right now because of the price action, because the bottom is very convincingly in. That doesn't mean it is in, by the way. Let me just make that clear. I'm not saying the bottom's in. There is a very strong case to be made that we do continue lower, not to the price I just drew, but just directionally to the downside, we break lower. There's a chance of that. My opinion is that the bottom is in, and that if we do go lower, it's going to be very quickly, and then we'll go back higher. But that's just my opinion, right? So don't just think that I'm dispensing the truth up here. I'm sharing my opinion in terms of what the next steps for price action for Bitcoin could be. Okay, going over back to the sentiment outlook, that's the theme, smart money. We have a couple of good comments here. But let's go ahead and jump into our sentiment. Everybody who's watching, smash the like button. Thank you for tuning in. Bitcoin, fear and greed, 26 out of 100. So we are out of extreme fear. We're into fear. Federal funds rate is likely to be cut in December, and that is 94% likely. Let's take a look at that. It's ticked down 93% likely on this morning's employment news. Okay, we'll get to that in a second. Bank of Japan still decidedly expected to go ahead and hike rates in December as a contrast. Initial jobless claims came in 191,000. The expectation was 220, and the last was 216. So it's still adding jobless claims, still a lot of jobless claims being added to the U.S. economy, but it's actually lower than what was expected. So when we talk about the indexes and Bitcoin and assets pricing in expectations, this is actually a more favorable outcome for the labor market than what economists were thinking. It's still not favorable overall. It's still because they're still less jobs are being added, or I should say, more jobless claims are being filed. But overall, I don't think that this shakes the outcome here, and we would have. This is illustrative of that we've only ticked down 1% today. Okay. I think you all understand that. Jobs numbers, not saying it's a nothing burger, but at this point, I wouldn't say that the Fed has made their decision, because they haven't made the decision, but I think it's going to be tough to do anything but cut rates at this point. Bank of Japan governor, this one's key, so lock in for this one. The Bank of Japan governor, not going to try to announce his name, KU, said on Thursday there was uncertainty on how far the central bank could raise rates. That's it, right? That's super, not super bullish, but that is what the market wants to hear, due to difficulty of estimating the country's neutral rate of interest, right? So that's their neutral rate. They're saying it's difficult for them to calculate that. I'm not going to get into those weeds. I'm going to very, very quickly just explain why this is bullish. I think they're still going to hike in December, but similar to the last period when the Japanese central bank came into the news, they probably won't hike again after the initial hike in December. So that's kind of what I'm reading from this comment from the bank governor of Japan. All right, moving along. Tom Lee's Bitminer bought a lot more Ethereum to the tune of 150 million worth of Ethereum. Russia's second largest bank, VTB, to launch Bitcoin and crypto trading next year. Cool. Again, these are bullish vibes. These are in the bullish vibe section. So these are not market moving, but they are good. They're bullish and they're vibes. DAT 21 Capital approved the SPAC. We talked about that. Eric Trump's American Bitcoin company, DAT, purchased 34 million Bitcoin. Again, bullish vibes. BlackRock BITL surpassed 500 million on the Binance chain. BNB. Okay. Deal book. So this is kind of going back to this interview. There was some more commentary that emerged. And let me just say, it's very interesting how they're kind of trickling out these comments, because they could have because we didn't get that clip yesterday, right? And I am going to be honest with you, I haven't dug like really deeply to try to find the full video yet, but they're being very strategic with how they're pushing out these audio clips. And it tells me that they really, I think, the way I'm interpreting kind of the pace of releasing these clips and these comments from Larry, is that at least the financial media is trying to curate a media trickle, a data information trickle from that interview that puts in a solid bottom, right? You interpret that how you will. I'm not saying that is definitely the way that it is, but that's the way that I'm kind of taking this. At the Dealbook Summit, BlackRock CEO framed Bitcoin as protection against physical insecurity. Interesting. Financial instability and long-term debasement. So the long-term debasement one, that's one that he's parroted before, and that's probably the reason why most folks are so bullish on Bitcoin, is because of the debasement trade. The denominator of most assets is the dollar, and it's being debased. Its purchasing power is being reduced by the Federal Reserve and by the Treasury. So those are the reasons that Fink is giving for why he, thinks that Bitcoin is important. That's how he's framing it. He also said, he added that the recent sell-off was caused by excess leverage, not weakening fundamentals. So, he's giving the bull case. He's framing this as a bull. That's a big deal, right? In the same week that you have Vanguard coming out, allowing Bitcoin to their customers, Bank of America coming out, raising their percentage that they recommend of crypto holdings, like, these are piling up and they're significant, and we've gotten them all freaking year. We've gotten these very bullish headlines from TradFi, but there's still hard-hitting headlines still to come with the Clarity Act, and then with this Vanguard headline, and Larry Fink kind of coming back up, reemerging as a champion right along with Michael Saylor in some sense, right along literally with Brian Armstrong, the founder, CEO of Coinbase, literally. So he's on stage with him, right? Kind of think of that positioning. Both leaders in crypto. One of them is a crypto startup, Coinbase, and the other one is not a startup, it is BlackRock, right? So that's all very bullish, right? And it comes at a time where there's a strong argument to be made that Bitcoin is forming a bottom, right? And it would be an interesting bottom to form here because we have trended down below traditionally some simple moving averages that we wouldn't have in the past, at least in this bull market, right? The bull action, the price action stayed above this yellow line, right? And yet we've gone down below that. Now that's yesterday's news, but it's still true, right? We have now printed several candles below that moving average, but what you'll notice is we are right next to this new one. I believe this is the 100-day. I think this is the 50-day. So this is good, right? We're finding support on a significant simple moving average, and this is kind of what you would expect, right? Bitcoin. Well, I wouldn't say this is what you would expect, but this does make sense. It's not as concerning, and it's a bit comforting to see there be support found on the weekly 100-day moving average there. 100 weekly moving average, I should say. Yeah, yellow's 50. All right, moving along here. Got about 10 minutes left. We talked a decent amount about Asia, but you'll see here the Asian stock markets closed decidedly green. Hong Kong was up almost a percentage. The China Shanghai was actually down, but basically flat. But then the Chinese stock market up 2.3%, right? And that kind of tells a story of like when there's tumult in the bond market and there's a lot of uncertainty, investors in Japan are not selling the stock market, right? So what does that tell you? It tells you, again, that this time is a little different. That this is not the yen carry trade from the past where there was a lot of uncertainty. And so there was a sell-off in the stock market, in the risk, right, ecosystem around Japan. This time we're seeing folks go into risk, right? It's very interesting. So things are always different. There's never, things never happen the same way twice. And that's why one of the most dangerous things as an investor is to say this time is different, but sometimes it is different, right? In 2008, there was a housing crisis. That was different, right? So you couldn't just go off of the things that had happened in the past. You have to be open-minded and say, hey, maybe these mortgage-backed securities aren't prime. Maybe they're subprime. And those that realized that they were subprime made a lot of money shorting the entire stock market. So there's a lot to be said about the Asian market rotation into risk during a time of uncertainty. If that trend continues, then that's going to be really interesting, and that could potentially push assets higher. Which brings us to a little bit more chart analysis. Looking here at the S&P 500, I'll actually switch over to the Bollinger Band. S&P 500 has not printed a weekly candle under the midline of the Bollinger Band since all the way back in May, right? And we got May of 2025 of this year. And we got close to breaking through, but we didn't even close a candle over it. We barely had a wick down for the S&P 500 on the weekly, right? So that signals strength. That's very strong. How long can that go on? How long can it continue? If you zoom out, right, this looks pretty overbought to some extent. If I bring up the MACD, this MACD is very overextended. But you've seen periods in the not too distant past where the MACD was overextended for months on end, right? Months on end. And then when we finally got a correction, right, it was definitely a dip to buy for the S&P 500, right? When we came back down here, I think this was 2022. So this was the inflation crisis where it became clear that all the COVID printing was sending inflation much higher. The supply chains were also contributing to high inflation, and the market shed 30%, right? But you wanted to be a buyer there, not a seller. So same thing here. after a prolonged period of MACD overbought, right, signaling momentum, continued bullish momentum. Perhaps, in the past, this is when you would have sold. And that we had a correction. This was the tariff news, right? A structural, fear-based news. It wasn't just FUD. It was actual, real rubber meets the road type of thing with the economy. You saw a big pullback in momentum, but you wanted to be a net buyer of this at the end of the day. The pullback here, I think, was similar. It was like 20 something percent. Yeah, 20%. So you wanted to be buying the bottom, not selling the bottom there. Okay. So that's the S&P. It's strong. Its MACD is overheated, but as I just pointed out, it's been overheated twice within the last 5 years and was able to sustain those overheated levels. This back here, it was not because of AI. Here, it's likely because of AI being a very bullish narrative, but then you get a big pullback because of the Liberation Day tariff announcements when Donald Trump takes office. Okay. So why am I showing you this? Because there's strength. It's still pretty risk on out there. The market just got another test. And you'll notice the MACD on the weekly did cross down, right? So that usually opens the door when these red histograms start popping up for the MACD. That usually opens the door for bearishness, right? And we got a little bit of a pullback here, but look, again, you wanted to be a buyer of this pullback, right? What was the stuff going on? I can't even really remember at this point what was pulling the market back. But yeah, that was the pullback. We were sold a bill of FUD, and you wanted to be buying that. Now, at any time, let me just make clear, there could potentially be a pullback, right? There could be some kind of crazy movement to the downside, not to that price necessarily, but there could be some weekly candles printed below the midline of the Bollinger Band. So you want to be prepared for that. You want to be aware of that. If you're trading this, stop losses definitely come to mind. If you're just investing this, you want to have cash on the sidelines to buy. You want to be taking profit, right, to have on the sidelines cash to be able to buy lower. However, that is a very logical thing to do. However, folks who've been taking too much profit haven't been rewarded because the prices just keep going higher and higher, and the dips that you would be waiting to buy don't really come. Now we got this one, but the question is did that curing of that little bit relief of bullish momentum, is that just going to turn around and just go even higher? And I think that the answer to that question really lies in what the technology does in the AI side and how well the CEOs like Sam Altman and other CEOs of big tech companies are able to sell it to the market. Hey, AI is great. Keep buying. It's going to reduce costs and expand margins for corporations. I will say that the headlines of amazing things happening in AI are, I think, becoming less and less convincing. But what won't be less and less convincing is if we start to get major scientific, mathematic, educational breakthroughs, right? And that's why I think the market is very hesitant to sell the S&P 500, to sell Google, Amazon, Microsoft, and other names, NVIDIA, is because what's stopping tomorrow a headline coming out saying that they've cured cancer, that they've made a huge development into solving or creating and inventing the systems necessary for nuclear fusion generation, right? These things are just a time away. And I think that that's kind of what the market is maybe kind of pricing in or hesitant to reprice to the downside, because right, as soon as we get a pullback, maybe they've already done that. Maybe OpenAI or some laboratory that has much more sophisticated artificial intelligence capabilities than you or I, just with our chat bots, they have done something really significant, and they're just waiting for a moment of weakness to launch that, and then the weakness dissipates, and all of a sudden everybody's pro AI again. So that's why I think some of the dynamics we're seeing and why it's continued to be risk on. Now, that hasn't necessarily rewarded crypto, as you'll notice with your portfolio. Crypto has not been able to participate in that prolonged upswing of risk on that the AI stocks have. But I think that the crypto side is much more a liquidity story, and as long as the stock market continues to stay risk on, the closer we get to that liquidity story flipping more favorable, I think that that's only going to be bullish for crypto. All right, we had an interesting question here. Mr. Twan said, T-Shroom, I'm 50-50 with bull and bear view. I see how we could pump with all this good news, but we do have Bank of Japan rates in December 19th. Also, it kind of seems like who else would buy? Everyone's in. That's the question. Who is the next marginal buyer? I think that's kind of why this was so bullish today, is that Larry Fink is revealing who the next marginal buyer is. It's the long only funds and it's the sovereign wealth funds. And I was thinking about this very question this morning, Mr. Twan, and kind of last night. Who is the next marginal buyer? Well, this takes me back over to the Bitcoin chart. And I really do think that the next marginal buyer is going to be a lot of swing traders. All right. This is just once they're convinced that that this is a bottom and it's not just a dead cat bounce, so to speak, right? The next marginal buyer is traders, right? The next marginal buyer is folks who are speculating that the bottom is in. So you have investors that went ahead and just they're DCAing all the time, and maybe there was some big volume that came in here, but I think the next marginal buyer is people saying, hey, look, if I bought here for Bitcoin, I think that the probabilities are high that I'll be able to sell it somewhere up here, right? I think that that's a big next marginal buyer is hedge funds, folks who are just looking for the next trade, and that could potentially get us into kind of a flywheel of, oh, well, if we're moving higher, and then you start to bring in the other next marginal buyers, which is a lot of retail. It's also a lot of people who are a lot of family offices and big funds who are on the fence about Bitcoin in general, right? They're sitting there like, yeah, I'm not really sure. I think that if I wanted to buy for my clients here, I would want to see this, lower, where some analysts are saying that Bitcoin could maybe go down to 65 or 72 or whatever else it is. But then they see Bitcoin start coming back up, and all of a sudden the analysts that they're listening to's theories are invalidated. Not because those analysts are dumb. There's a lot of people who are calling for lower numbers that are smart. I think we could see no lower numbers. That's on the table. But if we start to see the probability of those lower numbers being seen go down, meaning we're probably not going to go lower, the more that folks become convinced that we're probably not going to go lower, that volume starts to compound and we move higher. The question is this the bottom end, right? Is the next marginal hedge fund, is the next marginal investor or swing trader going to come in and say, okay, I want to make sure I'm buying low, because by the time we get to 110, right, 115, I won't really be buying low anymore. And the margin that I would get from selling high at a new all-time high is only going to be so much versus if I go ahead and buy some now, right? So it just becomes that game theoretic. Do I do the thing now, or do I wait to do the thing later? If they do the thing now and they buy now, the worst that can happen is it goes down, right? And they're thinking about probabilities. Maybe it goes down X percent. Well, can I afford to do that? The answer is yes. Then they take the position. All right. Will AVAX ever pump again? I think AVAX pumped yesterday. By the way, if you're just coming in, make sure you're smashing the like button. Yeah, so pump might be too strong of a word, but I like to stay out on the weekly charts just to give folks good perspectives maybe on that they're not seeing in other places. So the weekly chart for AVAX looks a little rough, right? We've seen consistently lower lows and lower highs, right? So that is a really poorly drawn line, but that is not what you want to see. However, this is the zoomed out chart. This is the weekly chart. And if you zoom in further to the 4-hour, you actually do see that there was a decent amount of movement to the upside recently. Okay, so I don't know that this is what everybody would call a pump, all right, but this is a pump. Now, what I'm noticing immediately here from the 4-hour chart on AVAX is that unfortunately we're seeing a lower high, right? Yeah, lower high. Although that wick got pretty good, but this other wick came in at 1524. This wick came in 1507, right? And then the other thing that's discouraging here is this lower low, right? Not a ton of daylight between the previous low, but it's just not what you want to see. Okay. However, the MACD is telling a little bit of a different story here in the 4-hour. We have these pointing pretty straight up, I would say, but you do have the green histogram starting to come down here. So let's go out to the 1 day and see if that's a little more illuminating. Now you have, so the 1 day is much more bullish because you're getting confirmed curls here, confirmed bullish momentum from the MACD lines, and you had a decelerating histogram that has switched back to accelerating histogram. So that's pretty decent. But again, lower highs and lower lows for AVAX. Is the bottom in? It could be, right? Because remember, altcoins usually kind of just tag along to Bitcoin's price action. Sometimes technical analysis is ignored because Bitcoin just takes off because its technical analysis was lined up, which it is, right? In contrast to AVAX, as I've already pointed out in the stream, you have a higher low and you have a higher high here, right? So that might be all it takes. Bitcoin shoots up. Again, those marginal buyers come in and start to compound and go higher. AVAX is probably just going to follow right along with it. Celio 718 said, too early to say, but do you think Fusaka upgrade will have similar effects to ETH's price compared to the last upgrade in May? I doubt it. Price is determined. Price is really more. It's not really determined in crypto, at least. Price is not so much determined by incremental upgrades on chain, especially for a really big one like Ethereum. It doesn't hurt. I don't think it hurts price action, but price action is much more about who's coming in to buy, right? So if there was a bunch of money on the sideline saying, man, I really want to see if this Fusaka upgrade does what it says it's going to do, if it's going to make the chain faster and cheaper and more decentralized, then I'm going to put my money into it. How many people are thinking that way? I don't know that a lot of investors are thinking that way. I think what they're thinking is, I want to see Ethereum get down to a certain price. That's where I want to buy it because then I'll sell it higher, right? So I think a lot of people that are buying it for the tech are probably already in. And then big digital asset treasuries like Bitminer that continue to buy, yeah, they're buying for the tech in some sense, but they're really buying for the network itself. They're buying because these bigger crypto projects are kind of trending in what's called Metcalfe's law, right? And you guys can go look into that for yourself. That I think is really why big money is going in, because they realize that this is just the new internet. Ethereum is the new internet, and there's all kinds of applications that can be built on it. Not to mention, it already is. It already is. It's an internet that you can build on, and it's a currency, right? So the incremental advancements in technology better happen. It's more of like, if they happen, that's great. If they don't happen, now it's a problem and we need to reanalyze. Celio said, by the way, pleasure to meet you in Crux in Vegas. Heck yeah. I'll never forget it. It was a good time to meet you. The show. Brother, do you still think Sui is good to get in now? Do I still think that? Well, I guess the short answer is yes, but the longer answer is, I don't know if I've ever said that you should get into it now, because now is only possible in this moment, right? But that's a little bit of a philosophical joke there. Yeah, I mean, I like Sui and I like to buy things on a discount. So while the technicals don't look great because it dropped this line of support back at $2.01, and it hasn't looked back until now, where it is. I think it looks pretty good. It's a discounted asset that I want to buy. right? I think you have slightly higher, lower lows, but you could even call this kind of a double bottom here. Double bottom for SUI, pretty nice on the daily. But then you also have a starkly higher high, right? That's more like what Bitcoin saw, less like what AVAX is seeing. Okay, so SUI over AVAX if you're just looking at higher highs and the lows comparison. Will altcoins ever pump again? Yes, in my opinion. We're waiting on the liquidity story. If you guys aren't tracking, and it seems like maybe we aren't tracked, some of us aren't tracking, the liquidity story is really the big story. So quantitative tightening is what the Fed has been doing for a couple of years now to try to keep inflation down. Remember, we talked about on the S&P, the 2022 sell-off that happened. I'm going to go to this on my chart so that I can explain this. This is just the macro, right? This is what's called macro analysis. You're watching a stream. We usually talk about news, but it's also important to talk about kind of the macros, right? And what does that mean? That's usually tracking global liquidity. Okay, so global liquidity had to be removed from the market back here. This is the S&P 500. This isn't crypto, but I'm illustrating this. And so the prices went down. The Federal Reserve went into they launched a weapon called quantitative tightening, and the weapon was launched to go fight the enemy, which is rising inflation. Inflation got up to like 9.2%. The Fed really is only comfortable with inflation being around 2%. Now, it's a little bit higher than that, but they're almost comfortable with it being where it is today, comfortable enough to cut rates. So that quantitative tightening policy has lasted, again, because they're trying to reduce inflation, right? And inflation was stubborn. I probably could have picked a better chart to illustrate this on, but they had this quantitative tightening policy all through this period, and it's only until like this week, right? So it would encompass all of this. It's only until this week that they have stopped QT, right? So during this whole period, the Fed has been doing QT. And now they've stopped the QT. So QT is over. The weapon that they launched to go fight inflation has been removed, okay? That doesn't mean that they've launched QE, the other weapon, which is to kind of help prevent a recession, to help prevent, I guess, in theory, inflation getting too low, or unemployment getting too high, or GDP starting to lag off, right? Now, there's a lot of other complexities to get into at that point, but if you're asking the question, will altcoins pump again? The answer is the consensus among macro analysts seems to be that we will see, and I'll go to a crypto chart now because that makes a lot more sense. This is total 3. We will see crypto pump again when quantitative easing comes in, right? So we don't have quantitative easing yet, but we have the opposite of quantitative easing, quantitative tightening, stopping. So the next logical step for the Federal Reserve's policy is QE, right? Which does the opposite of bring inflation lower, okay? So hopefully that's clear to you. Now, you might be sitting there thinking, well, what does crypto have to do with the Federal Reserve? I thought crypto was like blockchain technology and smart contracts. What does that have to do with the Federal Reserve, which just buys and sells bonds? And the answer is it very closely impacts it, right? And so if you're not tracking that, you need to, right? The Federal Reserve is very important to the whole category of risk-on assets, of risk assets, and the longer the tail that you are out on, the more risky the asset, the more sensitive it is to Fed policy, right? And that's why we've seen, essentially no bull market, no euphoric period for crypto. Now, a lot of people will say crypto's back at the bear market levels. It's not. Crypto is not back at the bear market levels, right? This is total 3. So this does not include Ethereum and Bitcoin. If I go to total 2, this is what it looks like, very similar. If I go to the prices here, just under $1 trillion at 890 billion, it is not the same as the bear market, folks, right? Crypto has had a bull market. It hasn't been a very euphoric bull market, but if you were buying in the bear market, and the bear market is characterized as the price action is no longer in a bull market, right? Kind of the cutoff was probably right around in here when the bull market stopped being a bull market and started being a bear market. If you had been buying during this bear market, then you would be in profit, right? Now the problem is that most people in crypto are buying on a DCA schedule. So yeah, they may have been buying at these prices, but they were also buying at these prices and maybe these prices and maybe these prices and maybe these prices. And unfortunately, what we see in our data is that the most amount of people come in at the tops, right? When everybody's writing a blog, when everybody's telling their cousin that they just made the money, people are coming in at the tops. So a lot of folks bought up here. They bought at the prices when prices were high for crypto, and a lot of them sold. A lot of them sold here, right? But a lot of them sold right along here, and now we're seeing kind of a bounce in price because the selling is slowing, right? There's not as many people that are selling because a lot of the weak hands, we call them weak hands, that bought up here are no longer present. They've exited the market. They left, right? So the people that are still here, they're just holding on to their coins, right? So when is the bull market? Well, this is one of the things that we need to have intact to see crypto bounce in a big way and go to new all-time highs, and Ethereum, for Cardano to have a chance of getting back to all-time highs, for cryptos to really start to perform in the way that we've seen them in previous bull markets, is you have to find a bottom. And you really want that bottom to not be lower than the previous lows. All right. So this was the previous low for total back here, 687 billion for the market cap. And then this is, here. So this is still a higher low, still a bull market, still a higher high as well, although a marginal higher high, especially compared to how much more the higher high this was, but still a bull market, still an uptrend. Now that uptrend will no longer be an uptrend. If we were to come in and put in a lower low, right? If this low was to be lower. Now, am I saying that we can't go higher if we were to put in a lower low? No. I mean, it just depends on when QT comes in. If we get another 10-10, if we get another big, scary black swan type of thing, that could shake even some of the strong hands that we're buying during the smart times to buy down at these lows. That could even shake them out, and we could potentially go lower before we go higher. But the idea is that, again, the theme of this video is that smart money is paying attention. They're paying attention because the stock market's at an all-time freaking high. It's usually when you don't want to buy, right? That's when weak hands buy. So the stock market is in the weak hands are buying period. There's a caveat to that because AI is, revolutionary technology. But so the smart money does what? It goes to other asset classes and says, hey, well, where is there discounts? Because if I'm in the part of the store, the stock market, where everything's the highest it's ever been priced, then I kind of want to go find, there are other parts of the store that I can go shopping. Right here. Discount, value, buy low, sell high. Okay. So that's where I think things are going to happen. And I think you also have, the quantitative easing cycle that we're likely going to be heading into. And this could be the biggest quantitative easing cycle we've ever seen, because it could essentially be run by the executive branch instead of the Federal Reserve, which is a very controversial thing. But Warrior said, my problem is DCAing all the way up and swapping out of Bitcoin way too early, now kicking myself for a rookie mistake. You have to be forgiving of yourself. And I don't mean this just for Warrior. I mean this for everybody. You have to be forgiving of yourself if you're going to be investing and or trading in the crypto markets, right? It's unprecedented. We've never had blockchain technology. And so a technology like this that is revolutionary, there is a lot of uncertainty about where it can go. Whereas like you take the microwave, take a microwave, it's the technology of a microwave. It's in everybody's home, right? Now, there could be some kind of breakthrough in microwave technology that makes your burritos hot faster or something like that. But the possibilities for microwave manufacturers are really marginal. Either they're going to go slightly up and they're going to make slightly more money, the people that make microwaves, or they're going to go down and they're going to make slightly less. With crypto could potentially replace all of money, right? So the potential for crypto is just straight up, but it's also could potentially be straight down, right? And so that's why when you compare crypto to like a company that just manufactures home goods like General Electric, it's such a different thing. You're really playing in I would call it kind of advanced mode, a difficult mode to be an investor in. However, it's also potentially the most rewarding mode to be an investor in the crypto markets. So if you have made mistakes, just realize that you're making mistakes in hard mode. So mistakes are to be expected. The question is what you do from there. How do you capitalize on the luxury of being an investor and having a lot of time to think and analyze and reposition yourself, right? So good stuff there. Taylor, do you think we are going to keep stair stepping up or get a full bear market? I don't think we get a bear market. And I suppose this is where I would start talking about the 4-year cycle. I don't think that the 4-year cycle matters anymore. I do think it did. I differ from some people in that I do think that the 4-year cycle was definitely a thing. Maybe it wasn't exactly 4 years, and maybe there was as much of an impact on the 4-year cycle that came from Fed policy as from the miners. But I do think that the 4-year cycle was a thing up until this year, up until I think it was April 19th of 2024 when the Bitcoin halving took place. It really took the marginal seller out of relevance. The marginal seller was Bitcoin miners that got rewarded with Bitcoin. They stack up the Bitcoin, and then at the end of the 4-year cycle, they sell it all, right? And that brings the price down. This time, those miners have not really gotten a whole lot of Bitcoin. They've gotten half as much as the last cycle, and a fourth as much as the cycle before that, and an eighth as much as the cycle before that, right? So they're coming to the table with less influence, okay? So this pullback, I think, is the echoes of the previous 4-year cycles, which were real, which were ferocious, and which were determined by miners as well as the business cycle, the credit cycle, the Fed monetary cycle. But I do not think that going forward that the 4-year cycle really matters a whole lot. I think if we get to the next end of the 4-year cycle, the next 4 years after the next Bitcoin halving, I think there'll probably be a little bit of a sell-off, right? Almost ceremonial, symbolically. Maybe some OG whales will do some selling. But the thing is that now Bitcoin, the best way to think about Bitcoin and its positioning in the market is no longer 4-year cycle or not 4-year cycle. I think most smart people are kind of concluding the 4-year cycle is no longer relevant. I think what most people are starting to think, though, is like, okay, well, how do we think about Bitcoin? What are the major macro factors that influence the price action, not over today, not over 4 hours, but over a quarter or 3 years? How do we think about what Bitcoin's price action can be at 2030, at 2050, or just 2028, right? So in order to think about that, what most analysts are doing are saying, at the end of the day, we're thinking about this. Bitcoin really kind of just makes sense to just put right in the same category as the QQQ, as the NASDAQ. And that could be wrong, right? But for now, it kind of seems like that's right. It kind of seems like that's kind of the right category to put it in. And so it's not AI. So what do you do with that? Bitcoin is not AI. It doesn't really have a way to get exposure to AI yet, right? So it's not exactly like the QQQ, which is dominated right now by the AI thesis. So giving a lot of information here. Some of this might be going over your head, but I think some of this is probably helping you become enriched as an investor, which is my goal. Which, by the way, we'll take a second for our sponsors here. Look, if you're looking for a great crypto exchange to trade on, 2bit, excellent. If you're looking for a really good VPN, we've got links down for NordVPN. If you're looking for a crypto tax guide to crypto tax professionals in the United States, decrypted.tax, 25% off when you use them. And if you're looking to not have to risk your own money trading crypto, you can buy an account through the prop trading firm breakout. And it's all in the links down below in the Linktree link. Go check those out. Warrior said, did you see Binance on their X account said the 4-year cycle was dead? I did not, but they're joining a choir of analysts who are singing that song. ISM business cycle will be the cycle indicator going forward, like most other asset classes. I definitely think that that's probable, right? There's a very talented analyst that I like a lot, Jordy Vischer, who's essentially that's his thesis, right? The ISM business cycle is kind of have crypto is going to fall in its orbit, right? Okay, we'll leave it there. This has been really good. I hope that you all have enjoyed this. If you're watching on YouTube, smash the like. If you are looking for a community of investors that resonate with a lot of what I've been saying today or disagree with what I've been saying, we have plenty of people in our community that still think differently than a lot of the things that I've said. If you're looking for just a good, well-rounded community of investors and traders, consider joining our trading group, the Tim Warren Trading Group. Links for that are down below. Have a great rest of your day. Keep your stop losses tight if you're trading. And really looking forward to seeing if we get any more sound bites from Larry Fink to help confirm this bottom. I'll see you all tomorrow around the same time, 10 a.m. Adios.